Hello everyone, I hope you're doing fantastic. Welcome to the channel. If you're in the real estate market, especially here in the Valley of the Sun, that's Arizona in case you were wondering, Phoenix specifically, then this interest rate update with Mitch Rochelle, the housing guy, and Stuart Varney from Fox Business News is definitely worth the watch. Make sure you stick around to the end.
More bad news for the housing market. Mortgage rates jump back up again. Can the housing market truly recover if mortgage rates stay above that level?
Now that's a great question, Stuart. Let's see what Mitch has to say. Mitch, take it away.
Well, the problem, Stuart, is the definition of recovery, because I'm not completely convinced that the market is in trouble.
Do me a favor before you forget or get too mesmerized by all this valuable data. Click like and subscribe. Somewhere along the line, could you leave a comment so I know you're there enjoying yourself?
If you're a home buyer, prices have steadily, creeped up. They're continuing to creep up. So I think it's hard for home buyers, but the market for people who actually own homes isn't that bad.
Well, that doesn't sound like good news for potential home buyers and for the overall economy. Mitch also thinks
there is a knock-on effect to the economy, though, because if people aren't buying homes, then people aren't buying furniture, they're not buying home improvement, then there's certainly a trickle-down effect when the housing market slows. But values are still there.
But it's the politics of this, isn't it? I mean, first-time home buyers, young home buyers, they really are priced out of the market. I mean, it's very difficult for them to get in. The American dream, home ownership, that is fading for so many people.
Now what Mitch says, and it's very interesting, is starting to happen to the younger generation who are doing the right things but can't afford to buy a home. What they're resulting to doing to feel like home might surprise you. Tell me what you think.
You look at that younger cohort who are, starting to come into their own, maybe starting families, getting promotions in their jobs, doing sort of all the right things, and yet they can't buy a home. That's why there's this massive market out there for people who actually rent homes as opposed to apartments, because people want to feel, like they're in a home, have a backyard, have a barbecue grill, have a picket fence, have a car in a garage, but they can't afford to buy them because the prices are too high and mortgage rates are too high.
Quite a situation here.
If rates stay where they are, most potential buyers won't be able to afford the homes that they want or need. Potential sellers aren't going to be listing their houses for sale anytime soon. Properties that are already for sale are starting to pile up. Sellers then have two primary options. One, continue to lower prices until their property gets sold, or perhaps take their properties off the market until a later date. By the way, if you're searching for your dream home, our new mobile app is a must-have. So download it. It's safe, it's free, it's private. Nobody's going to bother you every time you click on a home you're interested in. Nobody's going to sell your information, and the homes on our site are actually still for sale. Quite the differences from those other third-party real estate sites. Give it a try. What we need to see happen is the prices for everyday goods and services to be reduced, along with interest rates. Now, the market hasn't stalled, and it's not sky is falling time, as people are still buying and selling. Some people are relocating, some people are upsizing and downsizing. Some are at a profit level where they can take lesser than they may have for reasons that would best help their lives currently. But overall, we need to see the market continue to grow. And right now we see stagnant. Prices are holding, and that's a good thing. On the flip side, if interest rates fall too fast and goods and services or costs or prices for goods and services do as well, in the housing market, many times what happens is we get into bidding wars. Now there's people that want to buy houses, inventory starts shrinking. It's kind of like the last bottle of water in the desert. I can't believe somebody paid for that front row ticket. Those kind of examples happen when there's too little inventory and too much money to purchase them. So right now we're in a position we want to see the interest rates again, goods and services again, all get lowered price-wise. Therefore, people can afford to make their moves. Of course, facts, figures, statistics, data can change from state to state, city to city, sometimes subdivision to subdivision. Let's listen in as Stuart asks Mitch one more most excellent question about the housing market.
I want you to address this one too. A new study shows or finds that homes are overvalued by 35%. Okay, I don't know what they base this study on, but that's what they say. Overpriced 35%. Mitch, that sounds like a bubble to me. Is it a bubble?
No, it's not a bubble. Here's what's interesting about that study. What they did was they went back, looked at historical trends, and relative to longer term historical trends, prices are higher. However, the trend that they forgot to look at is the population trend. The population has been booming for the last 5 years. It accelerated greatly sort of through COVID and is continuing to accelerate. So if there are more people moving here, then we're building new homes. Guess what? There's no bubble. Prices are going up because of supply and demand.
Okay, so prices are going to hold at current levels and maybe go up some more. All good stuff. Mitch Rochelle, thank you very much indeed. See you again soon. Have a great weekend, Mitch.
There you have it. I truly hope you enjoyed this video. If you did, make sure you check out this video. Until next time, please take care. God bless America. I'll talk to you soon.